Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading. This is our weekly watch list video. All the stocks that we're looking at for the week coming up, including what I'm going to start on, which I think is the most important thing, is market context. Where we are going, where we just were, all the important things for the overall market. Because I could give you guys the best picks, I could make the best watch list for myself, but you need to know where the overall market may be trending. Because if you go long on a stock that then the market pulls back on and we're in a correction, obviously, the watch lists are going to look very, very red. That's why going into this week, I'm going to add one of my 5 new picks is going to be a ticker symbol that goes up when the overall NASDAQ market goes down. So I'm going to also add that, just in case we need something to make money while, the possibility that the market is going to continue to pull back. It doesn't have to. And I'm going to show really important levels that I just basically uncovered doing the research for the video, RSIs that I just uncovered, trend lines that I just uncovered, that we can actually potentially see a bounce at the early part of this week. Doesn't mean it's going to happen, right? Nobody has a crystal ball. I don't care how good you are. You can watch CNBC, Bloomberg, all these, read every newspaper with the experts telling you where the stock market's going to go. Nobody knows where the market is going to go. We can just give ourselves the best probability for, our edge. And that's what I'm here for. That's why I like technical analysis, so that I could get a little bit of a better chance of success. Because that's all we're looking for, is that slight edge, the slight edge that can make us money. So that's where we're going to start out. Now, last week, the week before, so Friday of the week before Labor Day, I had given back profit. I had given back profit that week, basically. So I was going into this past week with very, very strict trading rules for myself. I did not want to give back profit. So a lot of times I could be up, really nicely and give back profit off the top. And I hate that. It's not good for the account. It's not good for your overall mental. You just spend way too much mental capital. You overtrade for what? So I went into this week with I wasn't going to trade in the afternoons. I wasn't going to overtrade. If I was up, I was going to walk away and shut the platform. And I have to say, I did a really good job at that. So Tuesday, because Monday the market was closed, so Tuesday, Wednesday, Thursday, and Friday, I had really nice green days, and I didn't give any profit back. So I had a full week of nothing but green, nothing but good trades, and I didn't give anything back. I listened to my rules, which is right here. It's almost like right on my shoulder. You have to follow rules that you set for yourself. I don't care where you are in your journey. The best traders need to follow rules that they set for themselves. So anyway, that's a little update on my trading. So Friday was a green day of the week before. So I'm on a little bit of a roll, which is nice because the market has been so choppy. All right, now we got all that out of the way. I'm going to try to roll through this video as fast as possible. But these videos just take a long time because they're my, the whole weekend worth of research goes into these videos. And I want you guys to know everything that's in my brain. I feel like I need to give to the community, and I can see things because I'm pretty good with overall market direction and key levels. And, I've called almost every bounce that we've seen. Our watch lists have been really, really good. So I'm going to try to really fly through these. At the end, I'm going to give, my 5 ticker symbols that I have on my watch list, obviously. And, those are going to be ones that I'm going to watch on Monday, Tuesday. They're more, swing trade-ish, option type plays. They're not so much day trades, but, AMC is one of my ticker symbols. That's got to be on your watch list. It broke through 50. We called that, 2 weeks ago. It happened and it held 50. So that's also important. All right, now let's look at the SPY. Like I said, we're starting at overall market context. I apologize for these lines, but on my chart for my intraday trading, I have the key levels. These key levels I post every day. If you're in our Discord, you know that already. On the SPY, on the Qs, on the ES, the most important levels. So that's why you might not be able to see that well through here. But that doesn't really matter that you can't see this. What I'm looking at are the previous pullbacks. The previous pullbacks on the SPY have all seen support. If they've broken the 20 EMA, they've all had support, as you can see, right around, it's not working. This is the 50 moving average. The 50 moving average is something that the computer algorithms are being written to buy. So whenever it comes close or touches the 50, at least the past 3 months or 4 months, because you could go back to here also, this is also another one, and it all happens on the same day, as you can tell. The 18th, the 18th, the 18th, and the 19th here, it's always the same day. So the same week or so sees a little bit of weakness. Now, I feel like this is probably, since it happens on the exact same day of the month, I think this is matching up really, really perfectly with the 3rd Friday. So basically the options expiration. What has been going on is this market is being run on a lot of call buying in the options market. This is the 3rd Friday of each month, which is when all those options are expiring. And you can tell that that's where a lot of these bounces are happening. So I don't think it's coincidence that it's happening on the same, that week of the 3rd Friday. So anyway, getting the bounce at the 50 is being written in with the computer algorithms. When they pull that code and the computers do not buy at the 50, okay? And if we break the 50, that is when you can see the bigger corrections that happen right here. So about a year ago is when the computer algorithms did not have in their system to buy at the 50 moving average. And you can see here too, right here, it bounced off the 50, it bounced off the 50 here, it bounced off the 50 here. Ever since we broke the 50 back here for these bigger corrections, we've bounced off the 50 moving average on the SPY. So this is something that I'm going to be really, really watching closely, extremely closely this week. This is going to be the basis for everything I do during the week. I want to see, are we going to see a bounce on Monday or Tuesday? And if so, is the bounce going to continue? So not just one of these bounces that goes like a dead cat bounce and then comes back down. I want to see a real bounce. Now, on the RSI, this is also very important. Every pullback has bounced around the exact same RSI level, which is around, 41 to 50, 41 to 50, 41, 45. We are currently sitting at 48. This looks very familiar, very familiar, very familiar, very familiar to previous pullbacks. Will we see the bounce on the RSI on the daily chart? This RSI is more important on the daily chart. It gives a way better real reading for the SPY. That's why I like to look at it on the daily chart. So this is something that I'm going to be watching. We already went lower than this previous pullback. If we somehow break where this dotted line is, which has been where it's bounced, each time basically on these pullbacks to the 50, if we break this green dotted line, that is when we are headed for possibly the 10%, 12%, 15% even correction. If we bounce, then it's just going to be another quick little pullback where we could have all gotten in a lot cheaper. This is something to watch on Monday and Tuesday. Now, what I have here is the QQQ. So the QQQ is the same way. This, has a tendency of bouncing around the same green dotted line. We'll see if it does. There's a trend line there. Also on the ES, there's a clear trend line here that price has bounced off of that we are actually on right now. This is the futures for the S&P 500. So this is the futures for basically the SPY. We're at that level on the RSI for the futures that we've bounced before. So 47, we bounced at 49, we bounced at 45. These are the last couple of times. We are also sitting at that trend line, this ascending trend line that has held up as support even as far down as a year ago. We're sitting on it now. Right now, we just bounced off it slightly. I wouldn't even call it a bounce on Friday because we did sell off. This is a full-bodied, bearish candle on Friday. Monday is going to be so important for every chart that we look at. So that's, where we came from, right? So the pullback, I gave you all the possibilities of a potential bounce at this area. It may or may not happen. So I also wanted to show you guys, this is a pretty, and this is why this is on my watch list. Where is it? SQQQ. This, like I said, goes up when the, hang on one second. I'm just going to pull this off. Make this bigger if I can. Okay. This is the SQQQ. This will go up when the QQQ goes down. But what you can see here is the trend line works in the opposite way of the trend line for the overall market, because this is an inverse. So what you're seeing is every time it hits that trend line, price comes back down. Right here, if we zoom in, we're coming up to that trend line again and previous resistance. I would say on Monday or Tuesday, we're going to know pretty quickly if the market is going to be for real. If we wake up and, the futures are deep in the red, and then selling continues into our session and breaks this very clear base that formed. Now, then we can see further weakness and a huge correction. But I will say, every time we've tried this, right? So we base out on the QQQ. So the SQs also bases out. And then the QQQ sells off. SQ goes up a little bit, but then gets rejected hard. So it bases out, goes up, gets rejected hard. Bases out a little bit. And this is a huge base here. If we look here, I mean, this is going back a couple of weeks here of a real base that this formed, because the QQQ could not break out. So the SQs, they formed a very clear base and then started the curl up. If it hits trend and pulls on back, well, then you have yourself another leg higher on the Qs and the overall market. So I'm going to be watching these areas very, very closely to see if this breaks. Then that means, a correction could be coming. So all of this stuff is really, really going to be on my watch. Now, let me just go in for a second. I want to show you guys a couple of, important economic news. I like to know when important economic data is going to be released. So I just want to show you guys here. On, where are we? Monday, not a big deal. Tuesday, we have the CPI. This is an inflation gauge. So keep an eye on this on Tuesday at 8:30 and on Thursday at 8:30 for retail sales. Those are basically the top two economic news that, has the potential to move markets a little bit. It doesn't have to, but, just knowing these key economic news and when they come out is definitely important to know. So that's on Tuesday, 8:30 and on Thursday at 8:30. Apple this week on Tuesday, they have their product review, their product day where they release the iPhone 13 and some Apple Watches and stuff like that. Then we have also, bear with me another second. Where am I? All right. So you guys could see a little bit better. This is the earnings for the week. Very, very slow. Very slow earnings this week. Where's Oracle? So we have Oracle on Monday. That's about interesting, I guess. Not, there's really nothing. I don't really see anything. Fuel cell. So that's one on Tuesday. I don't know. I don't know if any of these are really, going to give us any, big moves that could make us money. But that's the earnings for the week. So also, we went over that. Now, let me just show you guys. And I like to go over this because if you're not currently in our Discord, this is our Discord. It is growing really rapidly every single day. New members are coming in here. I post every morning the key levels. It's good to know these levels. It tends to bounce at these levels. So knowing them and trading them, well, you have a better chance of knowing where the buyers are stepping in and where the potential sellers are stepping in, as well as my daily preview, where I post the data for the day, the yield, the Bitcoin, the pre-market gappers, important information like PPI out at 8:30. This was on Friday. And also this morning, posting my, picks for the week, as well as the general discussion. This is where a lot of people will have questions they post and get answers to. So it's nice to trade in a community. So that's our Discord. You're more than welcome to join. Now, going into my picks for the week. I'm going to start with Zynga, okay? This one, I'm going to pull up the daily. Actually, this is fine. We don't need the daily chart on this. This one is just working off of Apple. So the court ruling for Apple this past week said that if you're a developer on their platform, putting their, your company, your product out there on the App Store, now there's a potential way for these companies like Zynga, who makes these games that are played on, iPhones and iPads and, everything else. They split their profits so much with Apple. There's now a way that you can pay the company directly, which is going to save them so much money. So continuation for Zynga on Monday and Tuesday is something I'm going to be looking at. There's a very good possibility, because this is going to add to their earnings per share a lot, like really drastically giving them way more margin and profit. We have a key resistance area here. On Friday, could not break that area. I'm going to be looking for the break of about $9 to $9.10. And then we have a gap to fill to $9.75 up to previous highs, which were hit at around $12.50. You might be saying that's only a couple of dollars. Well, on a $9 stock, that is a huge percent move. So that's why this one is on my watch list. I'm going to be watching it very closely. Now, Sam Adams, I'm going to pull up on a daily chart. This is easier to see. So has done nothing but sell off ever since, these earnings reports and guidance hasn't been as good. Attributed to their hard seltzer has not sold as well. I mean, massive gap fills potential. Now on here, what I'm looking at is I am dialed in very, very closely to these two candles right here and this volume profile right here. This to me, and the experience that I have seen in the past, is telling me that there's a potential bottom that has been set with this company right here. A very nice candle, a very nice close to the candle, and then a very nice second continuation day candle here for a bullish hammer. Now you have a gap fill to 561, which is a solid $20 a share higher than we're currently sitting at right here. And then if that gap gets filled, I mean, there's so much more room to run for this stock. Ticker symbol SAM. It has been selling off so much. Take a look at, this is crazy. And this is why you can't just buy based on RSI for individual stocks. Because look at the RSI profile. So almost for 2 months, we have been sitting down in the 20s for the oversold on the RSI. So if you would have bought here, you would have still, you're buying something that's oversold. It continued to be so oversold. So, that's something that everybody should be aware of on the RSI. Now, what I do like about this RSI is this sharp uptrend here. It's possible that with the volume profile, these two candlesticks, that we can see a move higher. We also need the overall market to be in our favor as well. That goes with all these picks. If the market is very weak on Monday or Tuesday, then you should be playing a little more conservative with your call buying. Just know that. All right, so we went over that one. So this is Petco. They had the CEO buy $1 million worth of shares. That was the biggest insider buy of the week. We also have a trend line. We hit resistance, very clear resistance. We're pulling back to this trend line. The potential for this flat top breakout is something that would be on watch. You have previous highs that are way up here at 31. You're only at 21 right now. Huge percentage possibility for a gain. We need the market at our back though. So we went over, did we go over AMC yet? No. So this one is just an obvious one. This is obviously on everybody's watch list. We broke 50 and we held 50. That is what we called way back here. It has continued up. We got the break and the hold. So this is something that, since it held 50, is still very bullish. We'll just see where we end up. We have previous highs, but we also have a lot of overhead supply that can hold price down in this box area right here. So if you just take a look and draw out a box in this area here, and I'm just going to make this red. We have basically sold off when we've gotten here. We're approaching here, but price did not do very well in this area. So after we hit highs, it consolidated a lot around here and then just dumped. So, we got to be aware of that going into this kind of this box area, but there is room up to 60s if we break, if we hold 50 on Monday and get more volume. This is not enough volume. Right here, it's good volume, but you can see the volume that we needed for these epic runs, and we are far below that. So that's just something to keep an eye on. So we went over Zynga, SAM, Whoop, QQQ, SQ, and all right, so that was the 5 that we went over. Some of the ones that were on our watch list from a couple of weeks ago that broke our level and ripped up even higher. Great calls on DraftKings, on Caesar. A break of this trend was called 2 weeks ago, and we have done nothing but go up to hitting highs of 110. If you would have taken this at 90, just huge moves on some of these. This was another one. Where is it? This was another one, a short, if we could not break this trend. Very clear area of resistance here. And when we put this on our watch list here, we went all the way down to 1476. Literally one of the first days of the watch list. This was a huge, put options You could have done really, really well if you took our advice here at this clear, very clear area that the price cannot get above. Now, if it ever did break this level, the 1600 level, then you're looking at, you know, a break of all-time highs, definitely. And, you know, who knows where it goes after that? You're in that blue sky area. But it has to prove itself. Every time you could see these wicks on the daily chart, it just pulls back every time. It has not proven that it could break this level. So, you know, show me that you can break that level first, and you know, then we can talk. Another one from our watch list this previous week was a perfect breakout of this wedge all the way to 142, early entry at 134. This is an 8-point move. You know, call options could have been bought here for a nice gain that first day or two. Really nice continuation out of this flat top breakout. So, you know, some of these picks have done really well. Another one was Broadcom. This one could have been played for the break and retest. It's seen clear resistance up here at 505. It's currently at 498. So just keep this one, you know, on watch. It is holding up over support. So this is important to see. If we can continue higher, we did get a bounce, the third bounce, which is always the best bounce off trend, which is what we showed in our last watch list. We did break this flat top. We are holding the flat top. Will Broadcom continue to go higher? Well, before it does, it has to break this level here, which is, I would say, we could do right around 506. So I want to see that level broken. I want to see it broken, though, on high volume. Break this level, retest the level, and then continue higher. Don't just poke your head above it. Like here, poke your head and then sell off. I want to see some real clear areas where it breaks out and then it holds up. That means that there's just people, you know, taking profit here. They don't believe this move over previous resistance, but it is holding up. So that's just something else to keep on watch. I think we covered everything. I tried to do this as fast as possible. Overall market context is very important when a market is pulling back. You don't want to buy long too soon until the market proves itself again. The only problem is when the market pulls back, you have like a day at the most to make a move because the dips are getting bought up so fast by the computer algorithms. So I showed you all the RSI on the SPY, the 50 moving average on the SPY. Watch these levels. See if the computers are still buying at these levels. If you see a bounce at those levels, then maybe Monday or Tuesday we see the market rebound. If you see these levels break, if the 50 moving average on the SPY breaks, then the downside could be a very, you know, big correction, which if you get a 10% correction, stock prices are going to look really cheap. So while it'll be good to scoop up some cheap stocks, a 10% correction is still a healthy correction in a bull market. So there's nothing wrong with getting a correction like this. But just know if you do break some of these levels, you have to see where, you know, price can potentially come down to. And while it's going to look scary when the market does pull back, if it continues, there's going to be huge red days. It's going to look so scary. You're going to have to know we are still in a bull market. There's no reason why the dips should not get bought. So just keep that in mind. Until pattern changes, the dips should continue to get bought. So that's it for me. I hope you guys enjoyed this video. Hit the thumbs up for the work, for the research, and join our Discord. It's a great community, a great group in there. And I will see you guys all Monday morning. Take care.